Hi, Steve. How are you?
Good, Tina. How are you?
Doing well. Will you just take a minute and tell people who you are and what you do?
So my name is Steve Bousquet. I own a lawn care and landscape business in the eastern side of Connecticut, and we're celebrating our 40th year this year. I have a team of 30 people, and I have a little over 3,000 customers or clients. I'm also the partner with Christine Era in Green Profit Academy, which is a consulting business that helps lawn care and landscape businesses stay permanently profitable. I am a Profit First Mastery Level, Fix This Next advisor. I am a certified Clifton Strengths coach. I am a chief question officer and a few other things. I am a busy guy.
You are a busy guy. And one of the reasons I like to talk to you for all kinds of reasons. But one of the reasons I wanted to talk to you is because I talk about Profit First all the time for small businesses that we work with and other marketing businesses. And a couple of years ago, maybe even 3 or 4 years ago now, when we first met, there was this crazy night where we were all together and you said something about a sexy, sexy profit margin. And I was so intrigued. Tell me the story.
So we're choosing a question that we had to propose or talk about the next day. And mine was the sexy, sexy gross profit margin. And one of the things that's interesting in business, and one of the things I found out, about 80% of all small businesses never talk really about profits. They never talk about gross profit margins until maybe they get that information from their accountant at the end of the year when they do the taxes. But for the 20% of the businesses that want to talk about profit margins, we really want to talk about the sexy gross profit margin. And we were talking about what that number is. Now, that number might be different for different types of businesses in different industries, but we always want to be aware of what that sexy gross profit margin and sexy profit margin is for our company and for our industry.
Hey there, sorry to interrupt, but are you liking this content? Is it something that you're benefiting from? Are you learning something and growing a little bit from this content? If the answer to any of those questions is yes, do me a favor, hit that like button so the algorithm will send this out to more people just like you so that we can all build more profitable businesses and do more life together. Thanks for watching. So tell me a little bit of the difference between gross profit margin and net profit margin in terms of profit first, because that's a little bit different way than a normal accounting firm might look at it.
Yes. So typically, if you're going to do generally acceptable accounting, where you're doing revenue minus expenses equals profit. Profit first is revenue minus profit equals expenses. So we're going to manage in the profit first system, we're going to manage our business with what is remaining after we take profit. And so when I talk about sexy gross profit margin, really what I'm talking about is our revenue minus our COGS, or our cost of goods sold, which is going to be our labor, materials, and subs. So if we do $1,000 in revenue and the labor cost to produce that $1,000 was 200 and the material was 100 and we don't have any subs, so we have a sub that would give us a $700 gross profit margin, and at that it would be 70%. And what I found in most businesses is that 65 to 70% gross profit margin is the super, super sexy gross profit margin. 65 is sexy, sexy, and 60 is sexy. And once we drop below 55, not so sexy. And once it gets below 50, we need to really start working to get back in shape and take care of ourselves. And if the gross profit margin drops below 40%, that's the smoke alarm. And if it drops, below to 35%, now we're on fire. So basically what that means is we can't operate the business on 35% gross profit margin. And why can't we, right? And it's just because if we take how gross profit margin works is we get our revenue, take out our cost of goods sold, that gives us a gross profit margin. Then we have to minus the below line expenses. So all the overhead, all the support people that we're not like bookkeepers and admin that aren't there to produce revenue, but they're supporting us when we're producing revenue. And, rent, IT, computers, all the apps and everything, that's an expense. So you take your gross profit margin minus your expense, and that leaves you with net income. Now, one of the biggest things I see in businesses, they confuse net income with profit. Now, the challenge is that's net income. That's not profit, because that net income now has a job. That net income now has to go over to your balance sheet, and it has a job over on that side. It has to pay your federal and state income taxes. It has to do any capital improvements that you're planning on, comes out of your net income. Any additional draws, if you're an LLC, that's where your draws come out of. If you're an S corp, any additional distributions and draws come out of that. And then also, if you're going to leave any cash in the business, reserve cash, that comes out of your net income. So that's not necessarily profit. So profit is, or free cash flow profit is what's left over. I know I'm talking fast, but that's what's left over after all that. And that's why profit first, it's really important to take it first, because if you don't take it first, all these little hands, the fixed costs, the net income goes over to the balance sheet, the taxes take it, capital improvement takes it, distribution takes it. You got to have cash reserve takes it. So that's why it's, if you don't take it first, by the time everybody else grabs it, it's almost going to be less than 8 to 5%. And your business can't really survive and thrive if the profits are below 10 to 12%.
Okay, so why did you decide that this was sexy profit margin? Like, what does that turn into for the business owner at the end of the day if they have this working correctly?
So one of the things, if we have our gross profit margin dialed in, in the 5 functions of business, Mike talks about ACDC, which is 4 functions. I add a 5th, which is the people. So we have marketing, sales, deliverables, what we're delivering, what we're doing, finance, and then people. So if we have a sexy gross profit margin, we can really service all 5 functions of our business fully, not only to maintain the business, but to thrive and grow, because we have additional capital to invest in our people and our resources and our growth. And if we don't have that gross profit margin, then we're just going to maintain, because remember, gross profit margin minus cost, the fixed cost is going to give us our net income. And that net income is where we're spending our money.
Yeah, so no way to grow the business, really.
If there's no way to grow the business. And I've had conversations with people, they're insisting that they can do it on 35% gross profit margin. And within like 6 to 12 months, they're doing a liquidation plan.
Ooh, yeah. And it's interesting, like the businesses that you work with are, there are a lot of equipment involved with that. Some of our stuff is software that we work with, which is not as expensive typically as what you guys are dealing with on machinery. But one of the things that I did hear you talk about is that labor comes out above the line. And what's interesting about that is we have subcontractors. We put that above the line. And all I mean when I say that is to decide, to be able to calculate what our gross profit margin is. We take our revenue, we subtract COGS, cost of goods sold, and typically that's a license or subscription or something for us that helps us deliver the product. And then our subcontractors, that might be designers or brand workers, that kind of thing. And then that's our gross profit margin. What I've been talking to Linda about with Stab Financial is, are there some payroll pieces that we need to be pulling above that line? Because my time is still calculated below the line. And I am delivering some of our services, and so are some of our other employees. So that's one thing that we've been wrestling with, whether or not to take that above the line. And I think just hearing you talk about it, making sure either way you're calculating it, just making sure that the labor that delivers the goods and services does not fall below that 60%.
Right. So if you have that
why?
60%, it will cover the additional cost. So one of the things we did at my landscape company was we had managers who would have to go set jobs up and do different functions to get ready for the job. And we work including them as overhead, so the gross profit margin would have to cover them. But then we switched to figuring there was about 7 hours of direct labor that we were going there to physically set up the job, lay the plants out, work with the crew to get all the grades set up and everything. So we started to recoup more of that in the direct cost, the COGS. It was a little bit more tracking, but our numbers are a little more correct. So the price went up a little bit, and the customers really never noticed any of the price increases. So adding, 7 to 9 man hours, which was the manager's time, into that job, it didn't affect our closing ratio or anything. And it made me happier because it helped us keep our gross profit margin up, and less of the gross profit margin was there to cover overhead.
Yeah. So the key point for me when you start talking about that is it helps you define what that pricing should be. So if we pull some of that labor up that might be spent on different projects, if we're putting that above the line, it helps me know, hey, if I start dipping below that 60%, then I probably need to increase my prices on what I'm delivering in order to cover that and make sure that I'm maintaining a healthy, growing, thriving business.
So there's two different ways. And you brought up one. One is to increase your prices, and the other one is to collect on the revenue that you're really doing on the job. So if you were starting to do some of the work, or a manager was starting to do work, make sure that gets billed. That will help to maintain that. It's when we start doing other work and make sure that we're accounting for all the man hours on the jobs. So one of the first times when I see that slip, the first thing I look is, are they accounting for all the hours that went into the job? And typically that's the first slip up that the company will have, my company included, and most other companies. So there's going to be about a 3.5% to 4% variance of underestimating jobs, which is very common. So the first thing to do is, before we even increase prices or include, new wages or anything, is to make sure that if we say it's going to take 100 hours, that it doesn't take 120 hours, because that will start to dilute your gross profit margin, because you paid 120 hours of labor for 100 hours of revenue.
Okay, you bring up a great point there, which is time tracking. People in my business hate doing that. We're creative. We don't want to take the time to punch in the numbers. Have you found a way to make it easy and sustainable, forming a habit for people that work for you to track their time?
So we have, we have payroll system where they can clock in and out, and it's really like, green is this function, red is that function, blue is this function, yellow is that function. So it's time. But really the easiest thing to do is preset blocks of time. Like if you're going to work on a project, you're going to work on my website or my blog, right? Say I'm going to work on it for 3 hours. So either set up predetermined. So it's either going to be an hour or 3 hours. Everything's an hour, right? In some businesses, it might be everything's a half a day. For my landscape crew, everything's a day. And a day is, 11 hours. By the time we load the truck up, drive to the work site, work all day, drive back to the shop, clean everything up, put everything away, it's 11 hours. So, when we're booking time on a job, it's going to be a, 1 day job, or, a 10-day job, but it's not going to be a half a day or 3 hours. And I would imagine that your team's going to work on something for, 1 hour or 4 hours.
Yeah, sometimes days.
Or days. It could be, and
Yeah.
it could be, you could have a day, it could be days.
Yeah.
And then I find that color coding is the easiest way, especially because I'm a creative person too. And the colors just help me to kind of visually think, okay, that's X amount, or that's this type of billing.
Yeah. So are you doing that by customer or by project or both?
We're doing it by project. Yeah, and we'll
So-
even have folders for different types of jobs.
Okay.
Yep. So my guys will know that's a 1 day job. If they get a blue folder, that's a 1 day job. If they get a yellow folder, that's a multi-day job.
That's interesting. I guess it helps sort of manage their expectations about how much time they're putting into it as well, which is helpful.
Yes, right up front, you get a blue folder, that's today. That's,
Right.
and if it's a yellow, that means you're gonna have to keep track day by day.
Yeah.
there's a multi-function. Time tracking is very difficult. The easiest thing, the other thing we found is you need a partner. You need a time tracking partner. If you leave it just up to the creative, it will get missed. They need a partner. Just like people that are high discipline or deliberative, they need an activator or they need someone to get them going, because they will just sit there until it's perfect or until they figure out the perfect solution. It's paralysis by analysis and nothing will get done.
So what does that look like, a time tracking partner? Do you have one?
Somebody that's going to hold you accountable. Yeah, I use my calendar, and my team will use my calendar to track my time. But time sheets, who's going to collect your time sheet? If I say, Tina, keep your time, and then at the end of the month you'll turn it in. But if I say, hey, I need your time sheet today, and then I'm emailing you, hey, where's your time sheet? And that becomes a habit. And after a while, you're like, okay, Steve's going to be asking for my time sheet every day.
Right. Yeah. So a few of our subcontractors, I have a weekly task set up in one of the project management systems that sends them a notice to, hey, put your time in so that we can pay them.
Right.
It's always helpful to be able to say, so you get paid.
Yes. And it depends on the people. Some people you need to do it probably by noontime, and some people you need to do it by noon and at the end of the day. And some people are okay by the end of the week, but they have to answer. Knowing that you have to answer, it's like showing up for your workout, right? You're 100% more likely to go if your workout partner is waiting for you than if you're doing it on your own.
Yeah. Okay, so I know you talked a little bit and you said Mike has AC/DC. I think most of the people watching this will realize that's Mike Michalowicz. And AC/DC, I think, when did he first mention that? I know it's in Clockwork, but
yeah, it's in Clockwork. It's a basically, I don't even know what AC/DC actually stands for. I just know it's
tract, convert, deliver, and collect.
Collect, right? I turned it into, something that resonated with me, which is market, sell, deliver, finance, and then people.
Yes, you just added the people thing, which I think Mike would be proud of, considering his new book that's about to come out. So
yes.
I think he'd be happy that you're putting some time over there. But I just wanted to clarify that, just in case anyone's watching and they're like, who's Mike? What is ACD?
Oh yeah, Mike Michalowicz. Yeah, AC/DC from Clockwork. Yeah, absolutely. Yeah.
Okay, anything else on helping people, like biggest barriers that you see when you guys are working with other lawn care and landscape companies for getting to this sexy profit margin? I heard, and correct me if I'm wrong, one is maybe mindset, because some people think they can operate at a lower profit margin than what you're suggesting to be true. And that sounds like that probably doesn't work. But any other barriers that you see coming up regularly for people adopting this or being able to use it in their businesses?
So one is mindset. Everything is mindset, right? Thinking that I'm really profitable, but they can't show you their profitability if we ask to see the books. Probably the biggest barrier is that they actually don't have a solid income statement of P&L. It's not real numbers. They only are talking to their accountant quarterly. Their books are not up to date. And if their books are not kept precisely, they're not giving accurate information. And I've seen all kinds of ways of getting to gross profit margin. Some accountants include this, some accountants include that. So we have our own chart of accounts, basically how to set your books up. So we're talking about the right number. So accountants do everything based on taxes. So a cost is a cost to them. It really doesn't matter actually to them, whether it's labor, whether it is materials, whether it is a book, rent, it's a cost. So they're not looking at your books in a managerial way. They're looking at it from a tax point. So getting books that you can look at that will help you to manage, and that's what Profit First does. It breaks out what your real revenue is, and it breaks out, your 5 accounts that you need to have: taxes, owners pay, your OpEx, and then so you can manage your business the way you're supposed to instead of just, I have so many accounts now. It helps me with so much clarity, but you definitely want to have your income account, which is one account, owners, taxes, OpEx, and then your materials, right? Because they have to get paid first. So, and we have a payroll account now, we have marketing account, we have equipment account, but having the basic account set up gives you the clarity and not confusion. And people ask me, oh, do I really need to do that? And I don't think I do. Just one account's fine. I'm like, well, that's fine. But you have, I always say you have in your refrigerator, you have shelves, right? And drawers. They're like, well, yeah. I said, so why is that helpful? Well, I know where everything is, when I need it. I know when I'm out of stuff. I know where everything goes. I'm like, well, that's the same thing Profit First does, but it's for your money. So I think if we can do that with our lettuce and our milk, we could probably want to put our money, and we want to know where it is, how much, and when we're out, what it's for.
Hey, we're decanting cereal these days, so so I think we can decant our different accounts for our finances. And I saw that Mike is teaming up with I think it's Relay.
Yes.
That is helping allow you to establish as many accounts as you need to, because that can be difficult with some more traditional banks.
Yeah, that can be a little bit daunting. Getting people, when we first start them in Profit First, getting them to open up all their accounts is one thing. We can get them to do that. Then to start making allocations to the account is where people need help. You need a little hand holding, they need a little guidance, they need a little, pat on the back. It's going to be okay. We'll work through this. But it takes about 6 months to a year to get it fully implemented. Once it's fully implemented, the benefits start. I've never had so much money in my life. I never was ahead of my taxes. I never had this much clarity. I didn't have this much understanding about how much we were really spending on material. Because they were always behind, or they just paid the bills as they came in. There's no like, oh, we spend 24% of our total revenue annually on materials, just things like that. So it's about clarity. And we have systems for so many other things in our life and our business. Not having a system for the most important thing that makes everything go, the money, it doesn't logically make sense not to have a system for that.
Yeah, and just as you were saying that, it made me think about the hesitation that people have with moving into this, even especially, I mean, I don't know that it's any different, honestly, with people that you work with in lawn care and landscape business versus marketing people who don't like
All the
to look
same.
at numbers.
Yeah.
Probably very similar, but I will say that you're right. The thing that I hear happening is when people start using this, even though they didn't think that they needed it, they're like, oh, sometimes I used to be like, why are we out of cash? And I haven't had that thought in over a year. And so those are the kinds of things that it just takes that extra worry off, because we have so many things to be worried about as business owners. That is the last thing that we need on our minds, is whether or not we have enough cash to keep running the business.
There's so many other things to focus on, right? Taking care of clients, getting new clients. And there's so many different things that we have to focus on, that cash, or running and chasing cash, should not be one of them. That's not going to help us grow our business if we're worried about cash. So it's a nice system. It does take a little bit of time. You have to have confidence. And some people say, I don't have enough money. Should I start? And I'm like, well, that's exactly when you should start. Like, you start before you don't have enough money would be the best thing. But if it's super tight, now is the second best time to start.
Yeah, because it'll make a difference really fast.
It really does. And, most of the time, people that get into it, they are hesitant. We get them going. Then they, in the first quarter, they start seeing the cash. They start seeing where the money is and how it comes in and how it flows to their business. Then they're like, oh, okay, I get this system thing. And then in the second quarter, they're doing it. Now that's when they start saying, I've never had this much money. Because what they would do is, it was not strategic. It would just come in, it would go out, come in, go out. And every dollar has a job now when you do profit first, and it goes in this account and that account, and it goes to the right places. So it's just the other thing they want to do is, now they have some money. Now it's the third quarter doing profit first. They want to start paying all the debt off because they have all this money now. And we have to slow them down because you don't want to suck all that money out of your accounts. It's allocated in those accounts for a specific reason, because it's a long play. It's over the whole year, and it's not right now. So we have to get people out of that right now mindset with money. It's like, I know that account is overfunded right now, but in the fall, business slows down. You're not going to have the revenue, but the money will still be there because you put it in that account when business was, heavy, when you were doing a lot more volume.
Yeah, that's a huge piece that you start seeing some traction and you start wanting to do a lot of things. And so it is a good idea to slow it down. But the other thing about Profit First that I love is it's a diagnostic tool. So even if you start out and it feels tight and you're like, I can't even make this work, it means that something else is happening. So it's telling you a story. If you can't do it, then it's telling you that there's something wrong either with pricing or your expenses, and then it helps you diagnose exactly what to fix so that you can start doing it. So my encouragement to people is always, if it feels like it hurts, it's telling you a story about how your business is running that needs to be fixed. So figure out what that is and keep trying.
And no matter how much you try to be perfect with profit first, last year we were 1% off on our payroll, which, anything in 2.5 to 3% is a win, right? Even 2.5 to 4% really in business variance is considered a winning. So we were off 1% on payroll. And that was just off of taking 3 years of our payroll, seeing what the average was, and then using that as our payroll deduction. And it just follows the growth of the company. So even if our business grows, as our business did grow, those percentages line up with the growth. So I don't have to figure out, well, if we do $1,000, what is it going to be? And 2,000, what is it going to be? The percentages go, whether it's 1,000, 2,000. I'm using that as an example, but you don't have to figure all that out. And, to grow over the last 3 years and to be, 1% off a budget for payroll. I mean, that could be one extra pay period. It could be anything. Most people don't have a budget. They don't even know, they don't have a projection. And we didn't either, until we really got profit first dialed in. So it wasn't like I was doing this, we just really got it dialed in since I started working with Christine Era in 2018. So
Yeah, we've had those bumps too, where we get an account, just it gets off a little bit, but the beauty of it is that there's still money there. So it gives cushion to say, okay, let's make some adjustments. So that's why we haven't worried too much about getting a little bit off here and there, because you can make up for it, and it gives you
right.
just a whole lot of confidence and security that, okay, you've got it covered. You might have to shift some things around, but you're going to be okay.
And if you're competitive at all, if you're a competitive person, I don't have a lot of high competition, but there are a lot of people in business do, is if you run profit first in your business, you're going to be ahead of 95% of all small businesses in the country, because
Nice.
that's how dialed in that. When you start running profit first, that puts you in the elite top 5% of financial managers and small business in the country.
That's awesome. I didn't know that stat, so I love to hear that. I don't have high competition either, but I know plenty of businesses that we work with who do, and would love to be able to say that about their business.
80% of the businesses don't ever look at their numbers.
That's
And the ones, if you're doing profit first, you're so dialed into your business, it puts you in the top 5%.
awesome. I am in the top 5%.
Yes, of financial acumen in small business. Absolutely. And it's interesting because we hang out in a group that talks that language. They
Yeah.
use that vocabulary. But I would go to the chamber of commerce meetings, and in after hours and all this stuff, no one's talking business. And I found out because no one's paying attention to their business numbers. They're just focused on their trade, their craft, or whatever they do. They have no idea about their numbers.
And it's huge. It'll tell you whether or not you're going to survive. So Highly encourage it. Okay, well, Steve, this was wonderful. I really appreciate your time. And if anyone wants to find you, you help coach people in lawn care and landscaping, and your partner also does books, accounting, forecasting, all of these pieces that help Profit First run correctly. So where do they find you guys?
So we're going to give you some links to put in the description in the video, so people can click on that and find that. But you can find us at greenprofitacademy.com, and you can email me at steve@greenprofitacademy.com, and we'll make sure the links are in the description. And we do help lawn care and landscape businesses, stay permanently profitable. And I'm really thrilled. We keep signing up more people. We have over 300 people now in our private Facebook group, and we'll put that link down in the description too. We'll give that to you so you can add that. And that is for lawn care and landscape businesses. And we do a Facebook Live when we're in town. So sometimes it'll be 3 or 4 in a row. Sometimes we'll skip a couple if we're out of town on travel. But you can always tune in Wednesday nights. Christine, Aaron, and I do Facebook Live with different subjects, mostly around finances, and also about people, also about motivation, also about, forecasting and keeping your business healthy, like forecasting what to do with this recession. We want to make sure people aren't panicking and they're prepared for any kind of financial situation.
Yeah, and Profit First can really help you have a cushion like that when you need it. So that's awesome. And I know you guys have a ton of free resources. You have paid memberships as well and ongoing coaching programs. So if anyone is in the lawn care and landscaping business, definitely check out greenprofitacademy.com, and they can help get your books right so that you can be prepared for recession and just live a better life, because this also helps business owners be more profitable. So,
and it's all about families. Our guys, when we surveyed the people who we work with and our audience, it's all about making their family better. They're not trying to buy a Ferrari. They're not trying to buy their third, summer home. They're trying to take care of their families better. They're trying to give their kids and their family a better life. And that's really resonates with us. And that's what we want to support.
all right. Well, I appreciate your time today, Steve. All of these principles also apply to marketing businesses, health and wellness businesses. And we believe in Profit First for having a healthy business. So appreciate your time and all the learnings that we've had today.
Thanks.
All right. See ya.
Bye.
Oh my gosh, you reached the end. Congratulations and thanks for watching. One quick question before you go. Did you find this interesting? Do you think someone else that you know could benefit from the information you heard here today? Well, do me a favor, hit the like button and subscribe, and hit that bell so you can get notifications for when more of this information comes out. By hitting like, it means that this content goes out to other people just like you who might also be able to benefit from this information and can build a more profitable business so they can do more life. All right, thanks for watching. Bye.